You're listening to the Real Estate Runway podcast, powered by Quattro Capital, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right, everyone at the Real Estate Runway family. Today, we have a very special guest, Mr. Dan Handford of PassiveInvesting.com. Incredible operator. You know, the guy has done, it's been a phenomenal operator in the multifamily space and the self-storage space. And now we're going to talk about what they're doing in the car wash space these days, a higher cash flowing asset. So before we get into that, if you get any value out of the show, please scroll down, leave us that 5-star review and thoughtful comment. It really helps us grow the show. And if you want to apply to be on the show, you can visit us at thequattroway.com/podcast. And folks, we love hearing from you. If you want to recommend a topic, give us some feedback, or just say hello, you can email us at podcast@thequattroway.com. And lastly, but most important, if you'd like to follow Quattro Capital on Facebook, LinkedIn, or Instagram, you can visit us at Team Quattro Capital, one word, no special characters, or just visit us at thequattroway.com. And now, on to your scheduled production. All right, Real Estate Runway family, welcome to another episode of the Real Estate Runway podcast. I'm your host, Chad Sutton. We are powered by Quattro Capital, as always, in this episode. And today we have a very special guest, Mr. Dan Handford from PassiveInvesting.com, one of the managing partners, well-known face. Dan, welcome to the show. Pleasure to have you on. Long time no see, friend. How are you?
Yeah, doing very well. Thanks for having me, Chad.
Yeah. Hey, before we get into it, we're going to spend a little bit of time talking about your latest venture into the car wash space, on the side of multifamily here. But before we do that, give us a few minutes of just, who you are, what you guys have been up to at PassiveInvesting.com so the listeners can get to know you a little bit, if you don't mind.
Sure. Yeah. So definitely excited to kind of share a little bit about our background a little bit. And so, like he mentioned, I'm one of the managing partners here at PassiveInvesting.com. And we're a private equity real estate firm, primarily started in the multifamily real estate space. So have right now currently about $1.1 billion in assets under management just in multifamily. And then we have probably about 150 million in the express car wash space, which is what we started about this time last year, actually. So it's been right at about a year now, and currently have about 22 locations there. And then in the self-storage space, we have about another 150 to 170 million, somewhere around in there. And I also have one hotel that we've acquired last year as well. So that was right about 25 million. So we're sitting right now about 1.4 billion in assets under management. And we've acquired since 2018, right about 1.7 billion, because we've gone full cycle on a few projects. So we're currently sitting at about that 1.4 billion mark. And to date, since 2018, we've been able to raise from investors right at $600 million to be able to acquire those assets. So that's kind of what we've been doing up to this point, and what we've been working on.
Yeah, absolutely. And I know you guys have a pretty awesome event coming up here in, I think it's June of this year. You mind giving us a plug for that for a second?
Yeah, so it's called the Multifamily Investor Nation Convention. It's actually in Charlotte, North Carolina. You can find some more information by going to mfincon.com. And I know some of your team is going to be there as well representing. So it's going to be exciting to have them there again, as we had them there last year. And so we have some really great speakers that are going to be there. We usually have about 40, 50 speakers, primarily multifamily related, because it is the MFINCon, the Multifamily Investor Nation Conference. But we do this year have an alternative asset class track. We'll be talking about, self-storage and hotels and car washes and land entitlements and triple net leases and a lot of different kind of alternative asset classes that can fit very well alongside a portfolio of multifamily investments.
Yeah, thanks for that, Dan. And folks, I don't often promote events here on the show, but I've been a part of this one and attended this one for years. I think this is the second year it's in person, right? Post the COVID world. So, go over there to, was it MFIN Summit or MFIN.com?
It's mfincon.com. So you kind of have to put the con and then .com on there. So mfincon.com to find out more information.
Yes, it used to be MFIN Summit back in the day, but mfincon.com, folks, scroll down. That'll be in the show notes for your clicking pleasure. So anyway, Dan, let's get right on into the show here. I think we have a lot of content to cover, but you guys have been known as a multifamily operator since 2018, as you mentioned, and I know you've ventured into some other unit-based stuff with self-storage. But as of late, y'all have been really focusing on the car wash space. So what's up with that? What's going on in that space? And I'd love to get into the details there a little bit.
Yeah. So what's very interesting about the car wash space is that with one of my first introductions about car wash, which kind of made me go, maybe I should look into this further, is my wife and I had taken a private flight to New York City. And on our way to the airplane, we had invited a bunch of other friends to go with us and stuff. And the pilot was like, "Hey, do you know whose plane that is over there?" And it was a Citation 10, a Citation X. And so some of you might not know what that is, but it's the fastest business jet in the world, and it still is today. And you can basically go from coast to coast, from the East Coast to the West Coast in like 4 hours.
Wow.
So it flies like just right under Mach 1, right under that the speed of sound. And so I was like, "No, I don't know whose that is. Like why would I even know whose plane this is?" Right. And he said, "Oh, well, that's actually the local car wash guy." I'm like, "What? There's no way that car wash guy has." He goes, "Yeah, he has like 17 locations and washes like 2 million cars a year. And, he's just crushing it." I was like, "Wow." And so, of course, I got my mind thinking and trying to do some more investigating. And then 18, months later, we decided to launch it into our own group after doing a lot of research and due diligence and things like that. And one of the things that we found is that the car wash space does have a lot of cash flow to it. And there's multiple types of car washes that you can invest in. There's the typical kind of self-serve car washes where you kind of drive your car into the bay and use the wands and clean it yourself. And then you have what are called the IBAs, the in-bay automatic. So it's basically a self-serve bay that you still pull your car into, and the machine drives itself up and down the vehicle to clean it. And then there are full-service car washes where you pull your car in, you pay the attendant, and then you get out of your car and they drive it onto the conveyor. And on the other end, 15 people get across your car and dry it and clean the windows inside and out and vacuum it and things like that. And that's called a full service. And then the one that we invest in is one that's called an express car wash. And the express car washes are the car washes where you pull up and sometimes there's an attendant there. And there's also a lot of times there'll just be a pay station there. You go to the pay station, you pay for your single wash, or you sign up for a membership. And you can go through, you stay in the car, and there's somebody that still guides you onto the conveyor. You stay in the car, go through it. And then on the other end, you can use some of the free vacuums and some of the other amenities that are offered for, those different vacuum courts that are there. And so that particular model has been great because it's a model that allows us to have a lower labor burden to the actual overall asset, but then it also allows for some consistency in the cash flows by providing the opportunity for memberships. And these memberships is really what a lot of private equity groups have been liking as they've moved into this space and so started to acquire a lot of these assets. And there was actually a private equity group that went public with a group of car washes called Mr. Car Wash back in 2021. So that was one of the very first ones that was car wash only that went public. And it's still today the largest car wash operator in the country, specifically around car wash. And right now, car wash has been a very fractionalized space. And what that means is that there's mostly kind of smaller mom and pop operators and maybe a few that have, a couple of, larger numbers of assets in their portfolio. But most of it has been in the kind of, smaller mom and pop. So they get an SBA loan, they build an asset, and they might be able to build maybe 2 or 3, but then they get capped out or tapped out. And so that's one of the opportunities that we have as operators is to be able to go in and acquire these assets. We launched our car wash brand in March of last year. And right now it's February 28th of 2023. And, we're sitting right now at about 22 locations with 2 of them under development. And our goal is to continue to grow the portfolio and expand our brand to eventually do a private equity roll up or potentially do our own IPO at the end.
Yeah, that makes perfect sense. And so just going back to the brand level, so the goal is to get acquired by a larger private equity firm, but you are, going in and acquiring / developing these greenfield car washes and actually rolling them up under your brand. So is that all one fund, or is that like a single asset syndication type situation? How are you putting those together?
Yeah, so we are doing it as what we would call mini funds. And so the investors will typically know which assets they're investing in. And so usually we have between about 2 to 3, upwards to 7, up to this point, car washes in one fund. And we will put those in one fund, raise the money for it, and then close them in that one fund. So right now we have 5 different funds that we have actually started, and we're getting ready to launch our 6th fund for another portfolio of assets that we are acquiring out of the Nashville, Tennessee market.
Fantastic. I'd be curious to know where those are, by the way. I might be a patron. I live in the Nashville area. So,
Yeah, I certainly will let you know. I can't say anything about it right now, but once they get released,
when they close,
things like that, we can. Yeah.
Yeah, fair enough, man. Fair enough. So, let's talk a little bit about the who's you have to bring in to, to get these type of things rolling. So, you know, obviously you're probably not going out and hiring a multifamily property management company to do this. What kind of team are you having to build, and what sort of experts are required to really, bring these in-house and streamline the operations and add value to them?
That's actually the biggest challenge with going into the car wash space, is that there is no easy button, to be able to just call up a property
Yeah.
manager and say, "Hey, can you come manage my car wash?" And so we had to vertically integrate right away in the car wash space and create our own property management company. And so we have a property management company that we started called HRA Management, and all it's designed to do is to manage the car washes. And so we had to very selectively identify somebody who had the ability to have the experience to be able to fix the issues that come up with these different tunnels, because it's almost a daily struggle with these car washes to keep them running, because there's a lot of different moving parts in them. And so being able to have the preventative maintenance in place and having those teams available to be able to go on site to be able to, fix the tunnels when they start to have issues. And there are maintenance, technicians that you can call on that are third party to be able to help with these, but sometimes they can be 2 or 3 hours out, right? So we want to make sure that we can mobilize a team to be able to get them working as soon as possible, because downtime does cost a lot of money. And so the biggest piece was trying to, because we didn't want to have to manage these assets ourselves directly. So we knew that in order to get into this space, we needed to, really bring in a team of people that can help to operate it. And so Cameron Vroom on our team is the one who heads up the HRA management group, which is the group that we own. And he's now a managing partner in that group, and he is the one who leads our group there. And right now we have roughly about 150 to 160 full-time people that work for that group right now. So it's a pretty large operation. We have a full HR team and finance team, and there's a whole, whole layer of things that are going on behind the scenes when it comes to that type of a property management.
Yeah, that's just incredible, Dan. And so, it takes a little bit of guts to say, oh, this doesn't exist. Let's go build it. And if you build it, they will come. I mean, and I think Herb Kelleher with the Southwest is the guy that said, planes on the ground don't make money. So car washes, not washing cars, don't make money. So I can imagine that is a daily struggle to keep them running. So, at the nature of multiplying equity, right, is the ability to add value to an existing business. And so it sounds like part of that value is going to be brand recognition and kind of taking what might be a mom and pop shop or a greenfield site and placing it at what is becoming a known brand on it. But what other sorts of value add opportunities are you putting into these mini businesses to increase their revenue and popularity?
Yeah. So like in a typical multifamily, space, we're going to go in and renovate the interiors, maybe change out the countertops and the cabinets and the flooring, and put new paint on the walls, and, do a lot of things from the inside, and then also, going in and doing some of the exterior work. Right. So we do look at those things in these types of car washes as well, because if we go and buy an asset, so one of the assets in the portfolio we bought was called Sparkle Express Wash, right? So it had, kind of a race car theme to it, and yellows and reds. And our theme is actually, our brand is called Hurricane Express Wash. And so there's like blues and whites and blacks in that color, right? So we have to go in there and, paint the exterior, make sure we can change out the signage. And then we also have to go inside the tunnel itself and figure out what is the equipment that's in the tunnel that we want to make sure that we can fix and replace to be able to make sure it's actually working properly for us and our customers that are coming in. But then the real value add piece that we have. So in an apartment complex, obviously, when we go in there and do those renovations, spend that CapEx, we are hoping to be able to increase the rental rate, right? So you can hopefully increase it by $75, $100, maybe $200, a month, to be able to increase the income and the revenue, and increase that kind of bottom line net operating income number. Well, in car wash, we're definitely fixing the inside of the tunnel. We're making sure we incorporate our secret sauce to the vacuum courts. And, one of the things that we immediately do is try to go in there and we put compressed air at the vacuum courts, because that allows them to be able to spray off the different, detailing pieces inside of the car and different crevices. We provide window cleaner, extra tire shine to be able to tire shine their tires if they want to.
Mm-hmm.
And then we also have a bug and tar remover that we include in there. We also allow them to have as many microfiber towels to be able to, clean their car inside and out. And so there's a lot of things like that we do that are extra value add pieces. And we also have mat washers. on each one of the sites. So those are the things that we always make sure that we have, so we can have some brand consistency between our sites. But then the biggest value driver that we get as far as like income to us is focusing on the memberships. Okay. Because the memberships is where that MRR, the monthly recurring revenue, is what creates consistency. So when we have rain days or whatever, we still have money coming in because of these memberships. And so our goal is to be able to try to put somebody at each one of the pay stations to be able to start to talk to the customers and sell them on the option for the membership so that they will want to continue to be a member of our site. And I'll give you kind of an example of what we've been able to do so far. At the beginning of this year, we had around about 11,000 members across the portfolio. And today, as of today, we have roughly about 19,000. So we've almost doubled it in about a 2-month period of time. And it's because we focus on those membership sales. And we want to make sure that as we continue to grow the portfolio, that we're focused on those membership sales. And so when we go to look at for one of these assets, our kind of target is 5,000 memberships per site. And so when we go in to buy these assets, we want to buy assets that are around that kind of 2,000 memberships or less, because if we can go in there and incorporate our secret sauce and start to sell the memberships and go from, less than 1,000 or 1,500 memberships to 5,000 memberships, that is very, very impactful for the bottom line. And it allows us to as we continue to grow and get to the point of wanting that the private equity roll up, we have that monthly recurring revenue that creates the consistency, which allows us to have a higher multiple. And in this space, it's kind of an M&A type of transaction. So we're valued based off of the EBITDA, which is similar to the NOI, just a slightly different variation of it. But we get that equity multiple on on that EBITDA instead of, the cap rate analysis that we normally do on the apartment side of things. And so we're looking like right now, most car washes trade between 6 to 7, upwards to 9 or 10 on an equity multiple on like single asset washes. But when you can put a large group of car washes together, our goal is to get to about 200 to 300 locations before we do the actual private equity roll up. And that will allow us to have a larger equity multiple. And when we're doing our underwriting, we don't project that we're going to get, 15 to 20x multiples or anything like that. The most we'll usually do is about 12 to 12.5x. But a lot of these transactions that we've seen trade lately have been in that kind of 15 to 17 multiple when it's a large portfolio. And even a couple of them have been over 20, like 22, 23 multiple on that EBITDA. And so our goal is to, continue to manage these assets, continue to manage them properly, and then to be able to have a great brand that we can roll up to another private equity group that already is doing car wash, or be able to IPO on our own and go public and, have a nice win, a phenomenal win for our investors.
Yeah, that's a phenomenal game plan there. And so, so talking a little bit about the multiple at exit, do you see yourself positioning these for a private equity firm who then would take it and add substantial additional value to it at scale? Or is the private equity firm really looking for, okay, they have built the brand, they've got the customer base, we're going to buy this as a cash flow machine and kind of operate it at par? I'm just curious what the exit plan is there, or what the next guy's plan is,
Yeah. So what the private equity roll-up play would be somebody who already has, say, a couple hundred locations. They want to double their portfolio overnight, right? And so instead of them trying to play the game of buying onesies and twosies over the next 3 to 5 years, they want to buy one big, large transaction, roll it up to their portfolio, and then incorporate their secret sauce and continue to grow it from there. And then they're likely going to take it from a private equity roll-up, couple hundred locations or several hundred locations to an IPO themselves, right? And that's really where they're going to make their pop on their money, is when they start to do that kind of IPO play, if you will, from that side of things. And the nice thing about car wash is there's a lot of cash flow with it, right? So at multifamily right now, the cash flows have been eaten up a lot by the debt service, but even before that, cash flows were 5, 6, 7, 8%, somewhere around in there. And with car wash, our preferred returns are 10%, right? Because there's a lot of cash flow that's available on these investments. And so our cash flow average is usually between about 8 to 12%, depending on which assets that we're buying. Those are based on our conservative underwriting numbers. And we actually are right now on a path to be able to provide even higher cash flows to our investors, because of the focus on the memberships and increasing the cash flows on these assets and being able to pay them even higher returns than what are projected in our underwriting. And then, so they have very high cash flows during the hold period. And then of course they have the potential for higher exits on the back end too.
That's fantastic, Dan. So let's talk a little bit about how the investor wins. Everyone's got that WIFM, what's in it for me antenna on their top of their head there. So you alluded a little bit to, more substantial cash on cash return based on the cash flow potential. But as you're laying the capital stack in here, are you buying these from mom and pop operators in cash? Are you putting debt on them? And I'm curious what sort of benefits an investor would see from an upside perspective. It's still real estate. I don't know if there's any sort of depreciation you get to take advantage of. So maybe go into that a little bit on the what's in it for me for the investor.
Yeah, so there's definitely depreciation on the real estate holdings itself because we're buying not just the business, but we're buying the underlying land and the real estate, the actual building itself, and all the equipment inside. So there definitely is the depreciation side of it. And then from the investor's perspective, there's still the ability to cash flow during the hold period and have that kind of pop in the back end. So as far as the debt side of things, yes. So we're buying the full asset, but we are using a portion of it with debt. We're using typically local or regional bank financing. So it is full recourse on us as the operator, since we're the ones that are signing on the loans. The leverage is a little bit low though. So it's usually between about 50 to 60% on these types of transactions. And then the rest of it we're raising from investors.
Oh, fantastic. Well, Dan, this is an incredible business plan you guys have put together. It sounds like you're really becoming a force in the space. So, as far as people who want to reach out to you and connect more and talk about how to get involved with these projects, what's the best way to get in touch with you, Dan?
Sure. Yeah. So there's two ways that you can get a hold of us. So one is just go straight to our website, passiveinvesting.com. There's a lot of educational resources there. There's also a place there for you to, reach out to us if you want to become one of our investors. And then you can also just connect with me further on LinkedIn. So you can just go to linkwithdan.com. That'll bring you straight over to my LinkedIn profile. You can connect with me and continue to follow some of our content there.
Yeah, fantastic. And Dan, before we let you go, we got to hit you on some of these Quattro questions. Are you ready?
Sure.
All right. Question number one. Dan, what is your superpower in the space? Could be life or business, but what is your superpower and how does it benefit you?
I would say communication. I think communication is one of those things that is a key in many, many relationships, not even just when it comes to do with relationships with investors or with like brokers and sellers, but even going down to the personal level and having relationships with friends and family and even your spouse and your kids. I think it's one of the key things that I think is a linchpin in a lot of different relationships. And I think for myself, I think that's one of the strengths that God has given me is the ability to communicate and communicate effectively.
Well, having communicated with you and watched you communicate for the last 5 years, I think I'd agree with that. So well done there. Now let's take the flip side of the coin, Dan. Give me a little bit of dirt. What is your biggest mistake in life or business? And, how did it serve you in your learning?
Yeah, I would say one of the biggest mistakes that I made is when prior to getting into the real estate space, I had a group of medical clinics, and I actually still have them today. And those medical clinics, when we expanded from one location to two locations, we took our entire core team from the primary location and said, we want to make sure that this second location is successful. So we took everybody out of that team, out of that group, and then we put them straight into this new asset, new business, new medical clinic. And the second medical clinic did phenomenal. I mean, profitable within the first month, and numbers are going through the roof. But guess what? We forgot to continue to keep an eye on the first location, so that one started to suffer because we took that core team out. And so, that was a mistake that was made, and thankfully, it was all just my own money, so it wasn't like we had investors or anything like that. But I will tell you that that going through that has allowed me to know that if I want to continue to expand, like for example, we started in multifamily, right? And then we went into the self-storage space, and then in hotels, and then now in the express car wash space. As we continue to open up different asset classes, we're not taking our multifamily team and saying, hey guys, now you're going to go buy self-storage, and now you're going to go buy some hotels. We actually want to bring on a separate team in different silos to be able to acquire those assets so that we're not, spreading our team too thin and getting them distracted in different asset classes. So taking some of those experiences in the past and incorporating it into what we do now has really been very beneficial.
Yeah, that makes a lot of sense, Dan. It's really the right who's, and you can't forget the ship that's already floating as well. So that's an incredible lesson. And sounds like, I'm just curious, what did y'all do to fix it? You obviously fixed the other location.
Yeah. So, one of the things that we learned right away is that when we had one location, we looked at the numbers on a quarterly basis. And so we were like, okay, we're there every day. We could see if there's any pivots that need to be made on a daily basis. And so we were looking at those numbers on a quarterly basis. And so that's why it actually took an entire quarter for us to figure out, oh, wait a minute, we're not, that clinic's not performing. And so it allowed us to be able to increase the cadence of our financial analysis. And at the time we were doing it quarterly, and then we moved it to monthly, and then we ended up moving it to biweekly and then weekly. And now every week we're getting financial updates to make sure that we can pivot, because now we have 4 locations, right? I don't manage those clinics on a day-to-day basis. I have a good team in place there. I have a CEO that runs that corporation and that business now. My wife and I do spend about an hour and a half every month in a corporate directors meeting to make sure that our vision is still happening there. But that's really one of the things we had to incorporate there.
Yeah, fantastic. Thank you for that lesson learned, Dan. And I'm really excited to ask you this next question because, philanthropy is near and dear to Quattro's heart. After all, it is one of our 4 pillars: people, property, profit, and philanthropy, taking care of people. So just love to hear, what your philanthropic venture and heart is that you and your wife support on a regular basis. And you'd be surprised, we have a lot of reports of people, supporting on your behalf when we put something on the show like this. So love to hear where your heart is, man.
Yeah. So, outside of our local church, we've actually started about 3 years ago, a foundation, a public foundation called the Fortify Foundation. And the Fortify Foundation was started to be able to come alongside small to mid-sized Christian private schools and teach them the idea of investing for the long term, and by incorporating an endowment plan into their group, right? And because a lot of these like large institutions, whether it be Harvard or even Liberty University and some of these large schools, they have endowments in place, but some of the smaller private schools don't have the resources in place to be able to start their own endowments. And so we put that foundation together to be able to help come alongside those schools and teach them about endowment, and also be able to help them pool their resources together so they can now become an accredited investor with their endowments to be able to invest in alternative asset classes as well.
That's pretty incredible. And how might our listeners, donate to that fund or find more about it?
Yeah, you can go to fortifyfoundation.com, and you can either donate to the Fortify Foundation endowment itself, or if you have a specific school that you want to support, you can also donate to that school through the endowment as well.
Fantastic, Dan. And question number 4, number Quattro, that is, you kind of alluded to this earlier, but, go ahead and share with us where the listeners can find some of your educational resources, and just once again, how to find information on the MFIN Con that's coming up here in the summer.
Yeah, so you can go, as far as educational resources, you can go to passiveinvesting.com. We have a knowledge center on our website. So on the top menu there's a place that says Knowledge Center. There's some education there, as well as some videos that we have done in the past, which we have a great place for resources. And then you can also go to mfincon.com for the Multifamily Investor Nation Convention, which is coming up in June of 2023. In Charlotte, North Carolina.
All right. Fantastic, folks. And as always, scroll down on whatever modality you're listening to this to. All these links are right there for you, assuming my team has done their job. So check me on that. Leave it in the comment. If they're not there, we'll get them. So Dan, thank you so much for coming on the call. I appreciate you just sharing your knowledge and being willing to always talk to our listeners as you always do. So I appreciate you.
Sounds great. I appreciate it, Chad.
All right, everyone. This has been another episode of the Real Estate Runway Podcast. Until next time, over and out. All right, everyone. That was an incredible episode with Mr. Dan Handford. Let's all give him a hand for being on the show. Clap, clap, clap. Just a fantastic group we have with passiveinvesting.com. I love that they're always willing to come on and share their knowledge and what they're getting into. And look, they're on the cutting edge, jumping into the car wash space, as are a couple of other groups that are looking to expand their breadth in the private equity space. So check them out, passiveinvesting.com. And until next time, this has been another episode of the Real Estate Runway Podcast. So excited you were here. If you got any value out of this show, please leave us that 5-star review and thoughtful comment. If you want to be on the show, you can apply at thequattroway.com/podcast. And we are always on social media connecting with you. Team Quattro Capital, one word, no special characters. Until next time, this has been another episode of the Real Estate Runway Podcast. Over and out.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com. Until next time, this is the Real Estate Runway Podcast.